Buying hard assets is critical to growing your wealth, but here's how to start even if you don't have much. In this video, I'm going to talk about how to get started buying commercial real estate even if you don't have money. Because one of the secrets is that you don't always need capital to buy your first deal. Instead, it's about building expertise in a specific product, market, and developing relationships with the people who do have capital. I'm going to show you how to find a mentor, how to develop an asset class expertise, and ultimately how to buy your first deal even if you don't have the full capital stack yourself. Ron from Rohde Law, and this is part 2 in my series about inequality and really just the importance, not really commenting on whether it's good or bad, but it's really just talking about the importance of owning hard assets as a way to protect yourself against the future inequality and the wealth divide in America. The best ways is to start putting yourself in communities where you can learn. And what I mean is there are different online forums, there's YouTube, there's also in-person meetups, but the key is to find people who are also interested or experienced in the specific asset class in a specific type price point that fits where you want to be. And you got to put yourself in there and start collecting data and following these people. Twitter is a great example. I think X is a great forum for people to interact with other investors and for you to start building relationships with people who are already owning the assets that you want to buy. Number 2, how do you develop knowledge that is useful and can provide value to the people that you've identified in your target asset class? It's creating lists and creating comprehensive surveys and knowing more information about the market that the investors do themselves. That's how you create value. Once you develop a reputation for either sharing this information or compiling it and then answering questions in a very specific, detailed, and confident manner, that's how you bring your next level to where they view you as an expert with a narrow band of expertise that's greater than their own. Reach out to people like crazy. And we talk about networking, but I really don't think it's networking per se. Networking to me implies kind of a quid pro quo. You know, there's an exchange of who am I and you offer something and I offer something. Instead, you want to be providing information to everybody you meet. You want to hand out information at events. You want to ask people what they do and you want to offer to help them, and then you follow up and then you deliver on what you talk about. But you, if you don't have capital, need to be delivering value in a different way. Finally, if you are interested in structuring deals, you're going to want to follow this channel. As a lawyer, I know all about LLCs, the different agreements, and the best ways to protect your sweat equity and the best agreements that are a fair reflection of the return on a deal. Because once you've mastered these first 2 components, you've identified people who are investors that like your asset class and presumably they have disposable investment income. You've developed your own expertise such that you can recognize if a deal is good or not. Now you need that third part, which is bringing them together in a creative structured deal. So we can do joint venture, we can do active membership, we could do phantom equity, there's profit sharing agreements. There's all sorts of ways to structure it. And I guarantee you we can find one that fits your capital availability with the deal structure and another investor who will have the financial capability to put down the entire down payment. They can personally guarantee a bank loan, and you're going to be able to provide value and get in on that asset without money down. At the end of the day, commercial real estate is a team sport, and you can't do it alone. But if you're starting without a ton of capital and without experience, this is the only way or the best way to get into a deal with great investors who know the asset class and have capital, and you're going to develop expertise to prove your own confidence. I think that's one of the biggest things that new investors lack is confidence. You may be the best single-family residential investor and everybody knows how to do that model because they've either owned a house or they've rented a house, and so they're familiar because they've been through that process themselves. However, not every person has leased an industrial warehouse. And so because you haven't gone through that process, there is a lot of gray area about what to do. For that reason, people lack confidence. Maybe they even have the capital to get started, but they lack confidence about pulling the trigger on what makes a good industrial investment. So to wrap it all up again, develop expertise, identify the people and provide value to them and make yourself known. And then when a good deal comes up, you'll be able to do two things. You'll be able to decide that it's a good deal based on your underwriting, and you'll be able to reach out to people that know the asset type and can invest. And then you've got a lawyer right here that can paper it all up and protect both of you. So thanks for watching. This is a 3-part series, so subscribe for part 3.